Good morning, everybody. Welcome to our Long Verticals and Diagonals webcast. I'm Connie Hill. I'm happy to be with you here today and I want to welcome each and every one of you. You know, we've been doing these two strategies for several months now, and I hope you're kind of getting the hang of it. I hope you're following or falling into a routine that helps you decide maybe what might be, the best trade to do between those two strategies as we look at different stocks. We've got a lot to follow up on today. And we've got some new things that I really want to get into our account for us to be trading here. We are joined in the chat by Barb Armstrong. I'm glad Barb's here, good friend, fellow coach. She's here to back me up if there's some questions that I can't quite get to, but I hope you're following both of us on X. She's Barb Armstrong CS. I'm Connie Hill CS. We'll post educational content out in our X account, and it's free for you to follow and along and get those little nuggets of information along the way during the week. Let's go through our disclosures and let's get down to business. Oops. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. Schwab does not recommend the use of only technical analysis as your sole means of research. You want to kind of fill out the stocks, what they do, be aware of them. We'll be using the Paper Money software application. It's for educational purposes only. And it's a great educational tool. In fact, as you're learning these strategies, I think a great place to practice them is in that Paper Money account. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. When we place stop orders, which we do in this class, just know that when we do so, typically it's going to generate a market order and we can't have a guaranteed price on what that market order might be. All right. We actually don't have any agendas, but I do want to talk some concepts between long verticals and long diagonals. When we talk about them, some of the biggest things that factor into the price of an option is the impact of price, time, and volatility. So we'll be talking about those elements frequently, and we're going to look at a lot of example trades here today. Now, conceptually, both of these are directional strategies. One of them, I think, the long vertical, typically we're looking for a little bit bigger move. And then the diagonal, maybe not as big of a move, okay? When we're doing traditional diagonals, and I have done some non-traditional ones, one of which we're going to follow up with today. Many times you have that long and, well, in each of these trades, you have the long and the short position. Usually the long leg, if it goes out, in the case of a diagonal, a little bit further in time, then implied volatility increasing can help out the price of that option. And it could actually with a long vertical as well. But because we have those two legs, it's not as dramatic of an effect as though maybe we were just long the option in either case. But typically volatility, if it rises, it'll help both positions. If it drops down, then it'll kind of deflate the price of the option a little bit. All right, let's head over to Thinkorswim. And just looking at some stocks, they're rebounding today. Dell was the last one that I looked at here. Let's take a quick look and see how our markets are holding up, if they're holding up. No, we were up early on the day. The pre-market showed us that we were going to be up. So it looks like the SPX is up still up about 1%. Yesterday was a pretty decent sell-off day here, which was kind of interesting. It looked like it broke through some diagonal support here. So interesting, we're getting a little bit of a rebound here today. I know we had some big hitters reporting last night. Part of the reason that the markets are up today is because some of those stocks are bouncing pretty big, including Microsoft. Let's look at the NDX here, because it had sold off further than the other indices. It has been the weakest one. And so it looks like it's up right now just a little bit shy of 3%. So really a big rebound today for the NDX. Now, Russell 2000 hasn't been too shabby, but it looks like it's up just about 0.4%. And the last one, the Dow Jones, which has really been quite strong. On the Dow Jones, it looks like we're up about 0.3% here as well. And, interestingly, it has not gone below the 50-period moving average. So the red line's 50, the blue line is a 20, and then I've got my RSI up here as far as a momentum indicator that we might reference here today. What do you think the VIX is doing? Well, if the markets are up, what should the VIX be doing? Hopefully it's pulling back. Yeah. And it's not going to be a tick for tick type relationship, but just kind of generally speaking, yeah, if the market's performing well, yeah, there's not as much skittishness, not as much fear. And so the VIX will be a reflection of that. So yeah, we can see the VIX is dropping down here today. But creeping up into these, say, these 20 values and higher, we're starting to see a little bit more volatility being priced into the options. They can be a little bit more expensive. And sometimes what we'll see is the spreads widen a little bit. And so in some of the stocks that we've been looking at typically in our class, many of them I'm noticing where spreads are typically, I'm going to say fair. I'm starting to see them spread out a little bit. And so there's actually some trades we did not do today because of that. All right. Let's see. I was just looking at some of the comments in here. All right. Let's head over to our position statement. Let's take a look at some of our trades. And one of the things that's really important in this class is that we discuss the trades, how to manage them. You get to a point you feel like, oh, it's pretty easy to get into a trade, but then it's after we get in the management of the trade that really makes a difference. Okay. And especially on some of these trades that have been going on for a long period of time. So let's maybe start with some of the easy stuff. All right, let's start here with Altria. We have a more traditional diagonal with this stock. We have a longer dated August call. And then we've had 2 periods. We started this one a couple of weeks ago. We rolled it once, which means we just closed the short end of the contract, sold this other one. And right now, it's due to expire tomorrow. We brought in a 120 credit and we go buy it back for 3 cents. Oh, that's just lovely. We love seeing that type of a thing. Let's go take a quick look at the chart and then decide, do we think we want to roll one more week? Do we think that it might be worth it? So let's head over to Altria. Those of you that are trading along some of these trades in your paper account, I think it's a fantastic idea. It's how we learn, right? Is by doing that. And then if you're doing the same practice trades we're doing in our class, you might have questions during the week. And those questions that you might have had, feel free to ask them here in our class here today. So why is our short option up so nicely? Well, they had earnings, it looks like this morning. I guess the market didn't like what they had to say so much, right? So that is why this option position, the short leg, is doing so well, is because of the big drop today. Now, if we feel like this is still a decent trade to continue, then we might sell another contract against it. However, if we're looking at this and thinking, well, we'd only maybe roll one more week before we'd get out, and the stock is not looking that bullish right now, maybe it's just a good time to exit. We were able to roll it last week. We had a little bit of a profit there. Technically, if we get out right this second, we can be up a little bit if we close the trade down. So we could end up leaving the trade with a little bit of a profit, which is really nice after having seen that big drop. Okay, so we are going to close the trade. Both legs, we're not going to roll it. And let's see if we can get this to close all. It's just going to do it leg by leg. So typically what you'll want to do is close out of the short leg first. Typically, we don't want to just have like this open naked call, like if we had sold off our long leg first. So we don't want to do that. So let's close the short leg first. Oops, that's something left over in there. Let's try one more time. Create our closing order here. It's telling us 4 cents. That's fine. We just want to be out. And then we can feel, okay, we're going to go ahead and close out our short leg here as well. I mean, our long leg. We just closed out our short leg. All right, going to send this off and we are going to be out of the trade. All right. Couple of things here. Ricebird says, I see you got your label colors fixed and you're liking the look of the blue, the light blue. We'd had some discussion, different comments that many of you have made about what background is easier for your eyes to see. And I'd been using a black background for a while, and some people are like, oh, sometimes that's so hard to see. And it's true, it is a little hard to see. And so we're experimenting here with this light blue background instead of the stark white. Stark white was maybe a little bit too bright. So hopefully this light blue color will do well. Riceword says, could I share my labels script? And I think what you're referring to is this up here, Ricebird, the little, I call them performance labels, letting us know how the stock is done more recently. You bet, I am happy to share that with you. If I see it in my scratch pad, I'm not seeing it right away, so let's just go in and share it fresh. If I come over here to my studies, this one's called New Percentage Change. I've got another one that I think is very similar that's called Labels. But if I click on this little script logo, I can come up here and click on Share, and that'll share that there. We'll just say Cancel. I'll put this in the chat for those of you that are live in our session here. I'm going to paste it here for those of you that are watching the recording. And for you watching the recording, just go ahead, once you get this, hit pause so you can grab the formula. And then you'll just need to write down. You can just start with the exclamation point here. It is cap sensitive, so make sure you do the all caps and all caps. And then remember, anytime we share a script with you, it's never guaranteed as to accuracy or timing. However, most of the time they're going to work out okay. We just have to give you that little disclosure. There could be some inaccuracies in there. All right, Beauty, you're liking the blue a little bit better than the white. Okay. Well, very good. I'm glad blue's good for us. All right, so made out okay on Altria. Was it a big percentage gain? No. But when stocks are not moving around a ton, that can be one trade that we decide we want to do. And typically we'll want to be in it for a while and we'll want to roll. Now it does look like Altria is recovering here a bit from having been down even lower this morning, but I still think it's wise to move on. All right, next one up to review is, I'm going to do the easy ones first. All right, ConocoPhillips. Well, let's see what we had going on with Conoco here first, and we'll go to the chart. We've got the same expiration date here, just different strike prices. So if that's the case, is it a diagonal or is it a long vertical? It's a long vertical, right? When they keep the same expiration date. And so this was more looking for a little bit of a move here. Now on ConocoPhillips, you can see we're down kind of hefty on this trade. We're down about 45%. Many times on a long vertical, if you're down, say 50% or greater than, which hopefully it isn't, but sometimes you get to that point, you're like, I don't know if this trade's going to work out for us. Maybe we should call it quits. But let's go look at the chart. Let's go do our analysis, knowing our leg that's short is 125. And so we need the stock to get to 125. Now, when we got in this fresh last week, we had just had a kind of a resurgence in oil. In fact, I showed you the crude oil chart here, which we don't trade the futures, but this is one of the important charts to keep track of so you know what's going on with crude oil, because it's really going to mean a big deal to those companies that are either oil and energy companies or those that rely on oil, okay, oil prices. So let's go back to ConocoPhillips. We'll say, yeah, that looks very similar to what that crude oil chart looked like as far as the peaks and the pullbacks and breaking through some resistance. So last week when we got in, it had just broken through this diagonal resistance here. And some traders might use that as an entry to getting into a bullish position when it breaks through that. Well, look at that. We got in on the best day possible as far as that's the highest that it's gone. At the time we got in, it wasn't a red candle. It was a nice bullish candle. And it really didn't have that far to go to get to 125. Now it's reversed course. Looks like it's trying to pop up here again, trying to recover. So it's above the 20 moving average. It's above the 50 moving average now. Its relative strength line looks like it's dipping a little bit, but the value is 54. And so typically if it's 50 or higher, it typically means it's got some decent bullish momentum with it, okay? Going whatever the direction of the trend is. We have 22 days here. Do you think we're sunk? I don't think we're sunk, okay? I think we can give it a little bit more time to work, and this is what I'm going to watch for. One, I want it to get above this diagonal resistance again. This morning, it looks like it was getting close to, kind of faded since then. I would like to see it make a higher high than the high of the day that we got in. If we are not seeing it make a higher high and say it just fizzles out again up here, then we're probably just going to get out. We'll try to minimize our loss, not take as big of a loss as what we have now, give it the opportunity to come back up. If oil prices surge again, it's likely that this will surge. But right now, it's really trading quite along with the crude oil chart, which right now is at 84.62. And it looks like it's kind of recovering here a little bit. How many of you are doing this trade with me? Feel free to send me a message here in the chat. All right, a little bit of talk going on here, but looks like perhaps not really any questions. All right, that's what we're doing on ConocoPhillips. All right, now here are the tougher ones. I'm going to bring you over here. This is PanW, and this was our non-traditional diagonal. It's a put diagonal, and generally speaking, on a put diagonal, we are interested in this, or we think the stock is probably going to go down, pull back. In a non-traditional diagonal, like what we're doing with this stock, is we started back here in May, the end of May, and we did a long diagonal. So we're long, a longer dated put, which is going to be August, I believe, as we go out and look at it. And our idea there was that was just going to be a hedge for us. And we saw a strong bullish trend. I should maybe back up and let you see we had a strong bullish trend there. And the idea with this one is sell puts, sell puts, sell puts every single week. Let's sell a new put, sell a new put. Okay, let's bring in that premium. And we weren't going to care so much if the long leg went down in price because it was just helping us out as a hedge leg. Okay, the real value of this type of trading that we're doing really is more like a selling put strategy, but having that long leg as the hedge. And so we've been able to sell a lot of puts along the way. And right now, since we have been together, it's just kind of had a stretch of pulling back here. So our short put has not fared so well this week. All right, so our short put here is the 125 call. It is out here in August, so we've got 22 days left. It hasn't always been August 26th. Like I said, we'd been selling other ones against it. Oh, I'm in the wrong one. Let's go up here to PanW. There we go. Yeah, so here's this long leg. It is out to August, but look on our short leg here. You kind of get off of that, see if it'll, that's a little hard to see, but I think we'll be okay. This is our short leg. We sold it for $8.15. Now, ideally, by this time, we will have seen the theta decay kick in, right? Because we've had it for a week. Time is decaying on something that's going to expire tomorrow, right? Really rapid time decay. But because the stock dropped on us and went down, that's why this is not sitting as favorable. We're actually down on it. We're in the money. If this were in a live account, not a paper account, there's the possibility we could have been assigned early. Okay, so we want to kind of keep that in mind. In the paper account, it won't typically assign us early. So I don't want you to have a false sense of security. Oh, well, it never happened to me in paper money. Surely it couldn't happen in the market, when that's not the case. It can. You could be assigned early. But in this case, what we're going to do, we're just going to roll it out. Okay, stock looks like it's getting ready to bounce here again, which is what we'd want if we're going to sell another put. Great, we're going to sell it whatever the value is, and then if the stock goes up like we want it to, we think it will, then that's going to help that short put that we're going to be selling. Make sense? All right, let's see which one I had in mind here. Oh, let's go figure it out together. We're at the 325 is what we're short right now. 325 is up here, right? So it's a little ways away. So maybe we'd want to sell something lower than that, like say 320, 315. Okay, something that maybe is already above and we think that it could stay above. All right, so maybe let's look towards the 320 on that. So we're going to come out and pick which one we want, which the 320 is a 51 delta. I'm on the wrong side. 320 is not a 51 delta, it's a 49 delta. But we said, maybe look a little bit further out of the money than where it is right now, because it's pretty much sitting at 320. So maybe a 317, a 315. I'm kind of liking a little bit more open interest here at the 315 strike. So let's do 315 as what we're going to roll to. Now, remember, a roll just simply means we're closing one leg. In this case, would be closing down this option that expires tomorrow, and then we're selling another one. We're doing it together in one ticket. If it's confusing to you right now to do it on one order, one swoop, then do them separately. Okay, come out here and just go, okay, I'm going to buy back the short option. Just create your closing order, sell it, or buy it back, and then go ahead and sell the other one. In our case, we're going to do the rolling order. So we're going to say create rolling order. It knows what leg we want to get rid of. It knows what our short leg is. And so you can see down here in the bottom, it's got a +1 quantity on that July 31 that is a 325. And we're going to go out to this next week. It didn't know that. It just picks the next week. In this case, it is what we want. And we want to do the 315 strike instead of the 325. It doesn't know what strike we want to do. So we're going to go ahead, do that. We're closing out the one at a loss, but then we're bringing in a credit, giving ourselves a little bit of a credit on the roll. So let's go ahead. Oops, 72. It's going even better now. And we're going to send that in. And now we're going to be short the put for next Friday. And technically, we could roll it one more time out here to the ones that expire August 14th. We'll see how things are looking and see if we want to do that next week. Okay, but that's kind of where we stand on that. Let's see, a couple questions here. Chris, you did the ConocoPhillips trade. You said you're down about 36% on it. We're down a little bit more, but you're going to wait as well. Appreciate you sharing that with us. Ropateco wants to know, how do I add the study from the link that I shared? The link that I shared is right there. And what you would do if you're here with me live, you could grab the whole thing, or you could just grab up to the exclamation point. because that's what really matters, which is what I'm going to do. And I'm just going to copy that, come up here to setup, open shared item, and then paste it in this box right here. Select preview, and then give it a better name than ThinkScript Study. Give it a name like performance. I call mine performance labels. I think this new one said new performance or new labels or something. I can't remember. Name it something logical. Okay. I'm not going to import it. You would. I don't want to do it again and junk up my account. So you would click import. And then what you're like, okay, then where do I find it? Right? Where do I find it? Come over here to your charts, come over here to study. And then this is called new percentage here, I guess. So whatever it is that you called it, remember, I'm going to put in new P. And so you can go find it again, then you can add it over to your additional studies in the chart. Okay. That might be, oh, Barb's helping us out here as well. Adam had a question here. What about the bid-ask spread? Let's go back to PanW. It is, I appreciate you bringing that up because this is when the spreads are a little bit larger. And it's kind of spread out a little bit as volatility has been increasing in the market. And with this price of the stock going down over the last more than a week, typically we're going to see what? We're going to see the prices get a little bit more expensive. Now, this does have a lot of implied volatility in it, which means it's expected to move. And so it's kind of important to get a midpoint price here because those spreads are so big. And when you do the roll, it'll calculate it based on the midpoint price. That mark price is what it's going to use. Okay, so appreciate you talking about that. If it were even wider, then we might consider saying no, we're not going to do it anymore. In this case, I really think we're going to be okay. We got the midpoint price out of it, and I think we're going to be okay, but I think you're wise to pay attention to that. All right, last one we need to look at here is actually Google. Google, we had to do a turnabout on this. Now you're looking at this and it's looking like, oh, we're up 66% and we're up over $2,000. That's for the position that's left, okay? On this one, we did a long put vertical last week because we saw, let's get it with the L here, we saw it drop. It had an earnings report. We saw it drop down. And so we said, we're going to do a long put vertical on it. Well, the earnings that had the bad reaction, but it started to recover here during the week. Well, is that helpful to our position? No, it was not. And it kept going and going. And so on Tuesday, which was this candle here, we made a decision. The decision was, let's go buy back the long leg because it's the one that's hurting it. Looks like it wants to recover. We're going to keep the short put and have it help make up the difference for what we had to buy the long leg back for. So currently, we just have this short position from the original order. So on it, we had brought in $8.95. It's down to just a little bit under $3. It was up a little bit, even a little bit nicer than this, meaning this price was down. We'd been able to lock in a little bit more gain. 310 is where we would like the stock to stay above. So 310 is down here. So it looks like it's doing it. We need to change our focus now, though, because now we're just short that put. We want to get what we can out of it, but this thing could maybe even go sideways for the last week and we'd still have that time decay working for us. If it were to drop dramatically, then we'd probably go back, buy back the put. But right now, it's still kind of working for us. We can see it had those 4 days of pop, pop, pop after the big drop. So we're going to be watching this closely. Again, it has to stay above 310, so it's in good shape to do that. But we really want to maybe milk a little bit more out of that short put. Yeah. Alec wants to know, what did Connie name her script? My script that I was using here is called New Percent Change, but I actually don't like that name. I've got another one that I think it's called Performance, Labels Performance. That's what this is a different formula, slightly different, I should say. Has some different colors. I changed these colors in here to go a little bit better with that blue background. Okay. New positions. All right, we did the tough work there managing. We still have those 4 positions out there that we need to manage. And I have some ideas of some things I think that we want to do here this morning. All right. Valero Energy is another oil and energy stock, but it's been one of those stocks that you can see. Let's go back to a year chart. I want you to see how bullish this stock has been over the last year. Yeah, it really has been fairly steady. Has not traded nearly as much in tune with the crude oil contract. I think it's a partially refiner here. In any case, for a technical setup, it looks like it came down to our 20 moving average. It's still making higher highs and higher lows. I think I may have taken my bubble off, but the most high price here actually is a new all-time high that it's ever been. Okay, so this little stretch here, it keeps making higher and higher all-time highs. It's having a nice bounce here today. Now it's currently at 307, and the peak up here is around, I'm going to say 320. So we could look for a small directional move or one to perform even a little bit more. The RSI, it's a nice 63, so the relative strength is fairly strong here. It pulled back when the price pulled back, and so, which is fine. We would expect that. Not too worried about it. So in your mind, would you prefer to do a diagonal, like a long call diagonal, or would you prefer to do a long call vertical? Okay, you can think about it. It could be a different answer for each of us. All right. On this one, we are going to go directional. All right, so we're going to come out here to the trade tab. And generally with the verticals, we want to work with 20 to 50 days worth of time is what a lot of traders like to do. It's kind of the sweet spot. So having some weeklies here gives us some additional possibilities. But if we come and we look at the open interest, we're kind of like, there's not a lot of open interest there in the August options. August 28th, rather. September 4, oh, it's even worse. And basically it boils down to either go with the short end of the time frame at the August expiration or come out here to the September monthly expiration, where again, you see a lot of open interest. On this one, we are going to do the shorter period of time. And I was looking here, let's see if this still makes sense. I was looking to do the 305, 310. Let's see if this still makes sense to do. I'm in the wrong contract. There we go. All right, that's a little bit better with some open interest here. 305 was a little bit in the money, and 310, we're going to spread this out by 5 here. All right, that gives us a net debit of 240. All right. Ooh, now 230. So we would be risking 230, 235, wherever it ends up, to make what? Let's go down to 230. We could probably get filled there. We'd risk 230 to make 270. Okay, so we'd be risking less than what our max theoretical gain is, which is, over 100%, which is, I'm going to say, on the juicy side. What do we need the stock to do? We need it to go above 310 by options expiration. Where is it? It's at 308. It's a $300 stock. If I put my mouse at 310, it's going to look like nothing. Okay. Somebody wanted to be more aggressive and say, I think that move's going to be bigger. You could sell the 315 or the 320, but we'd want to make sure the stock is closing above there before the options expire. And usually we want to get out even before then. Okay. So we're going to keep our 310. We're going to still be a little conservative here. And in our account, we can risk $2,000 per trade. So let's take our $2,000 divide that by 230, our max theoretical risk, we can do 8 contracts. So we're going to. Here go our 8 contracts. We're going to put in an order here to buy it back if we get a percentage of the max gain. We talk about this every week. What to you is a good percentage of the max gain? Some of you are like, I'm happy at 50. Take me out of 50. Not in as long. Hopefully you get out quicker. Some of you are like, well, I think I can get a little bit more. Maybe you set it at 60 or 70 or 80%. Okay. You might, and that's fine. And there's no right or no wrong. It's more of a matter of, I think, your trading style and your, where do you think you can get the most profits and get out quickly, right? Is kind of what you're balancing out there. On this one, let's do 70%. Okay. If we can get 70% of 270, that means if we got $1.89 out of this, we'd be happy. So we'll add a $1.89 to 230, which gives us 419. I'm just going to round it to 420, and we're going to say if we can buy this back for 420, we'll be happy. We'll be getting 70% of the max gain. Would be just happy with that. Okay, so we're going to send this on. Chris says, maybe 50% is better in this market. It could be, right? You said 70%, and that's what I said. Yeah, but there's no right, there's no wrong. Now, if we're maybe say Valero makes a move and it's sitting up here maybe around 320, and it's maybe getting stuck, we might go in and say, good enough. You got to the new resistance level. It is beyond 310, but maybe we need more time to pass to have that time decay work all the way in favor of getting that. Okay, so we might go out and adjust that. Okay, if it does that. If not, we'll see if it makes a nice move and gets us up into that territory. All right. Let me get a couple of other trades on here. Let's look at Las Vegas Sands. I don't know. That is okay. Let's look at UNH here. UNH been trending pretty nicely. They did have their earnings. They popped up, kind of pulled back. Does this like it's making a more directional move or maybe just slightly bullish? Okay. I'm going to say it's only going slightly bullish, just kind of looking at if I put up my mouse here, it's just kind of stuck around this 420-ish area. All right. So we're going to do a long call diagonal here, not looking for a really big move in the stock. And many times with diagonals, it's nice to just go a little out of the money as opposed to a lot out of the money. Okay, let's go see what our possibilities are here. We're going to go out. We're going to do a diagonal out here. We're going to sell a September leg. This is going to be a more traditional diagonal. And on it, I was looking to do the 420 call. I think that'll be about right. It's our at the money option. If you want to be more conservative, you could go deeper in the money on the longer leg. Okay, we're just going to kind of go at the money with a little bit of intrinsic value. Okay, so we're going to keep that 420 in mind. Then for our short leg, we're just going to come up here to the August 7. All right. And I was looking here to maybe sell the 425, although let's kind of look at the open interest here. If we did the one with a 44 delta, it would be about 56 contracts. The 49 delta is 138. I like the fact that we've got 429 out here, 429 contracts. Let's go ahead and sell the 430. Okay. 430 is a little bit away of the target, but it's just a little bit out of the money as opposed to say 440, 450, 460. Okay, it's just a little ways out. So let's go ahead. We're going to start at our 430 strike price. We're going to say buy. We're going to choose diagonal. Then we're going to determine here, we wanted to go out here to September 18th. We wanted to use the 420 strike. And so we're going to have a net debit here of 1558 because these are more expensive contracts. It's a higher price stock. So those September options, yeah, they are on the expensive side. We're only going to do one here, right? We don't want to risk more than 2,000 if we can help it. So we're just going to do the one contract here. I do want to show you the risk profile on this. Go to analyze trade. And let's just have one in there. And this is kind of what I want you to see. Some of you might be familiar with using the risk profile. Some of you might be a little bit newer to it, but it just kind of shows us a graphical representation of what we're likely to expect with the stock. We put the longest dated expiration date up here. So that'd be September 19th, right after the 18th. And then this date down here, when you're starting out, typically reflects today's date, but you can come out here and play with it. That's going to be our purple line. Where is peak profitability at expiration on the green line? It's going to be right here at our short leg at 425. So that's showing possible profits, and that is so hard to see. I can't even see it. 500 and something dollars, okay? Because it's a little bit above this 500 mark. So something a little bit higher than 500, but is it going to be hard to nail that? Yeah, it's going to be hard to nail that. If quickly it goes to that area, then we might go, great. Buy it back, sell another one, roll it quickly. If that were to occur, I'm not going to wait till our class time, okay? Because it would be important to get it right when it's there at the peak. But think more that maybe it's a range we're going to look for. Maybe we might look for something between, say, this is at, that's our current price there, about 423. So maybe our current price, and maybe only going maybe a couple of bucks beyond. I said 425 here. The peak is really at 430. I apologize. So 430, because that is our short leg. You know, maybe it's a range between, say, 423 to say this is 437, maybe 440. So something where we're just trying to maybe capture something in there. Okay, that's what we're really going to be looking for. All right. Even though this is our pie in the sky number, probably don't plan on it. All right. Let's go ahead. We're going to put that in our dynamic diagonals grouping. We're going to send it off. And there it goes. All right. Trader Joe says the risk to reward isn't very attractive on this one. It's not super attractive, but we're just looking for it to stay in a short range. The long vertical that we did, yeah, definitely has a lot more gain from the move, but we are going to expect a bigger move on Valero than we're going to expect on United Health. Okay, so kind of compensates for that. And the thought is, hopefully we can collect some premium in August, in the August 7th, then the August 14th, then the August 21, and the August 28. Every single week, we're going to want to see if we can sell to lower that net. But that's how that's going to work. All right, you guys, my time is almost up here. You've had some really good questions. Somebody says UNH looks like it's in a squeeze. Trader Joe says look like it's slightly like a bull flag. Okay. Chris gets the feeling that energy prices aren't going down significantly anytime soon. I'm gonna not make any comments there, but yeah. Oil until we're resolved over in Iran, yeah, oil's going to be volatile. All right. So to summarize, we had 4 positions we still have going on. We talked about the management of those positions. Then we put on a long vertical in Valero, long call vertical. Then we just did this long call diagonal in UNH where we're not looking for as big of a move, but looking to continually sell some calls against that longer dated September option. Okay, that's going to be our purpose there. If you want to practice these in your practice account or your paper account, that's a great place to see how things work and to be able to watch it yourself more than just looking at it once a week with me. Okay, that'd be great for you. So I'm going to encourage you to do so. And I can tell the ones of you that are doing these trades with me because you come up with these questions. You're like, well, what about this? And what about that? Because you're doing the practice trade along, which is fantastic. Now, I do hope you are following us on our Trader Talks channel. It just makes it easier to find our content. If you become a subscriber, you've got playlists, you see what's going on. Next up is investing in dividend stocks with Cameron May. So that'll be right at the top of the hour. So if you're not a subscriber, you don't need to wait any longer. Follow Barb and I on our X accounts. And if this was helpful to you today, go ahead and hit the like button on the way out. That lets others know that you found this useful. And we have about 6 trades we need to follow up on next week. So have a good week. Have a good weekend. We'll wish Barb well on her surgery. Most of you know she's going in for Barb 3.0 this next week. So we wish her well in her surgery. We'll see you next week, guys. Bye-bye.